Thank you, Mr. S. I hope you can all hear me. Good evening. Can you guys hear me?
Yes,
Good
we
evening,
can.
Doctor. Yes, we can.
Yes. All right. Thank you so much. I think we are having a bit of some network problems due to, load shedding and a combination of other things. But as Mr. S has said, my name is Thelma, and I'm going to be taking you through this tutorial where we are going to be revising what we have done in class, making sure that we are prepared and preparing for exams so that when we get to sit for economics 1B, it will be much easier to attempt the questions because we would have covered quite a lot of things in our sessions. So I'm going to just quickly go into the business of the day so that at least we can start. So you are going to be seeing me admitting people who are waiting so that they can also join us here and there. So I understand that in class you have already gone through unit 1, which is more like an introduction to macroeconomics. So we are also just going to go through that unit together here so that we can be able to move together. So obviously we are going to be trying to move as in the same pace as the pace that you will be moving with as well. So from our module guide, we've got these 9 units that we are going to cover in macroeconomics. So the first unit that we are going to look at, it will be looking at the introduction of macroeconomics. And then after that, we are hoping that next week, with those that would have joined, we are going to go to unit 2. And then week 3, we are aiming to do 2 units, which is unit 3 and unit 4, where we are going to talk about the monetary sector, the public sector, quite interesting chapters there. And unit 4, we will talk about the theories that we find in economics that try to explain various views of the economy, of the macroeconomy. So you are going to meet your Keynesian view, classical view, and a whole lot of other macroeconomic theories. And then after that, we are going to move to unit 5, where we are going to talk about inflation, a very short and straight to the point chapter as well, which just tells us about what inflation is, what are the causes, what are the types, and what can government do to combat inflation and some of the effects of inflation. And then, of course, unemployment as well in unit 7, and then unit 8, economic growth, unit 9, your foreign sector. So as you can see, this module, it covers all the macroeconomic objectives that can be found in any economy. So it covers unemployment, it covers inflation, it covers economic growth, it covers the monetary sector, all the things that talk about the monetary economics, right? So obviously one would then want to understand that what is the difference between what we did last semester, microeconomics, and what we are going to do now. I would say that from a general view, you are more or less looking at the opposite sides of the same coin, where we are saying, if you are talking about microeconomics, we are looking at where we are looking at individual players in an economy, which can include like individual consumers, individual firms, how they relate together in an economy, what their decisions, their individual decisions, what are the impact of those individual decisions. So you are more looking at the small components of an economy when you are looking at microeconomics. Now the opposite becomes true when you are looking at macroeconomics. This is where you are trying to look at the aggregate of things, where you are trying to look at the whole economy instead of just looking at individual price of goods and services. You are looking at the general price levels in an economy at an aggregated level. And when you are looking at the actions of individuals in microeconomics, in macroeconomics, we'll be saying how does those actions of maybe groups of people affect the whole economy, or the decisions or policies that the government puts, how does it affect the whole economy? So macroeconomics looks at the bigger picture. And at this point, I would then say, according to me, macroeconomics becomes easier than microeconomics. Why? Because in microeconomics, there are a lot of small components, small things, small concepts that you must grasp for you to be able to understand the whole picture. Whereas when you come to macroeconomics, things are grouped together. So it's more like you are looking at the whole picture. So there are no little small components or too many concepts as compared to micro economics. So those are some of the differences that you can think of or that you have already been exposed to when you look, when you go through the module guide, the module outline, your unit 1 is specified there. So these are some of the differences that we can also relate to, because I've already spoken about them. And of course, I know you have gone through some of them, and also being students that have covered microeconomics, it will be easier to understand this slide, which is showing kind of a comparison of the two microeconomics and macroeconomics. So for example, I already mentioned the issue of price, where we are saying when it's micro, we are concerned about the price of a product, or how a firm gets to decide on the price of its product depending on the market structure that that firm is belonging to. But when it comes to macroeconomics now, we are concerned about the consumer price index, which constitutes of a basket that is goods and services that are representative. So instead of us just looking at the price of one product, instead of us looking at the actions of one firm, we are now concerned about the CPI, the consumer price index, or even inflation, where we are not where we are not just looking at the increase in the price of one product, but we are now looking at the general prices in the whole economy, in the whole country. And it can also even go beyond a country, where we are looking at probably how the price of oil has affected maybe a certain country that imports or exports. So macroeconomics then gives us that bigger view, that bigger picture, right? So another example here, I can just pick one. It says here, microeconomics looks at a firm's decision to export, right? An individual firm in a certain industry, in a certain location, deciding to produce more than what is needed by the consumers that it supplies, then it exports that excess output to other countries. That's an individual firm. But now, when we are looking at macroeconomics, we are now looking at the total exports of all the firms that are in a country, that are in South Africa, for example. We are now interested in the total exports, the value of the exports, all the goods and services that were sold outside the borders of South Africa, imports as well. If we are looking at microeconomics, we are saying an individual can just decide to buy goods from another country, or a firm can decide to buy inputs or goods from another country. But when you're looking at macro now, you are more concerned about the total imports, the total number of goods and services that were actually brought from other countries. So in general, we are just saying, okay, can anyone hear me? I'm seeing others are writing, they can't hear me.
Yes, we can hear you.
Yes, we can hear you. Thank you.
Oh, okay. So I
Yes,
think
we
it's
can.
it could be some connection problems from their side, from the student side. So let's continue. All right. So generally, that is what it looks at. And like I said, I personally then think if you made it for microeconomics, then you are in a better space you are more able to do microeconomics even better. Why? Because in your microeconomics, you are looking at variable cost, fixed cost, marginal cost, those small, many factors that you need to put into account, those small concepts that you need to remember, because it then makes the total, and it's very small components, but a lot of them that you have to grasp and be able to remember. But when it comes to macroeconomics, it's more like the things are grouped together, so you don't need to remember a lot of small concepts that is compared to microeconomics. All right, so so on the understanding of the concept of micro and macro, there are two points that are found in your module guide, which then gives us a picture of macroeconomics. Just a few examples of those. So the first one is South Africa's current account deficit narrowed to 2.5% of GDP in 2017. Reports in 2017 reports the World Bank. So as a macroeconomist, you start to think, all right, this statement here by the World Bank, what does it mean to South Africa? And what could be the possible causes of the current account being in deficit? What can we do? What is that effect in terms of the economy as a whole, in terms of South Africa? So now, what can the government do? What policies can help the current account not to be in deficit? So it's thinking around the whole economy. It's thinking around the aggregate, the total, and not individual firms. Microeconomics is important, yes, because it is those individuals, those individual firms that then build up to make the whole economy. So they are equally important. Now, the second think point, which also gives us that the macroeconomic concept, is looking at the bigger picture, the whole economy. It talks about in its national development plan, the South African government explicitly aims to reduce inequality. Now, already, this tells us that, number one, it's a national development plan, which means we are looking at the macro, we are looking at the overall, the bigger picture. And then the government is claiming or is saying, is aiming at reducing inequality in the whole economy. So it means that they want to look at issues that will make sure that there is equal distribution of income in South Africa, the whole nation, as measured by the Gini coefficient. So these two think points, these two concepts, they then give us a picture of macroeconomics that we then need to look at the bigger picture that is presented by the certain actions or that or that come as an effect of something happening. Like, for example, if our current account is in deficit, it means we need to do something as an economy, because this is going to have some detrimental effect on our GDP, to name but just one point there. So now, at macroeconomic level, what can the government do? How can we encourage exports? What can be done? What is the cause? Probably, what is the cause of this? If we know the cause of it, then obviously at a national level, we can be able to put up policies that will help to tackle it, or to reduce this deficit, or to deal away with that deficit. So at the end of the day, what we are saying is that macroeconomics is contained with the whole economy. It's contained with aggregate, and it looks like issues that affect the whole economy. That's what exactly I've said. And for example, we are going to look at employment issues. We are going to look at inflation, economic growth, BOP, balance of payment account, and distribution of income, which are some of the things that these two things then point us to. Right. So that was the background. That was the differentiation between macroeconomics and microeconomics. And of course, I also mentioned about the units that we are also going to be covering in our tutorials so as to prepare for the exam or for assessments, right? So now, from this point going forward, you need to also remember what is in your module guide. You need to remember what is in your module guide and the questions that are posed there. And you are encouraged to constantly go to your module guide, look at the questions that are there, and be able at least to answer the questions and to understand the concepts that are there, right? So now we are going to start with having understood the way or the view of macroeconomics. The first thing now that is important, that acts as a grounding, a foundation for you to be able to understand anything else that you are going to do in the module, the circular flow of income. This is very important. I would encourage us to continuously revise this because it will help you in the next units, right? And it is where most of the other units are coming from. They feed into this unit. For example, you are going to look at the monetary sector. You are going to look at the government. You are going to look at the foreign sector as units, as different units. And all these things, they come from this circular flow of income, where we are saying we've got different players in the economy that contribute to or that are interrelated to each other. So when you understand where this is coming from, where this unit is coming from, it becomes easier for you to then connect it to everything else that will follow in the module, right? So like I said, I'm experiencing load shedding. So if I'm kicked out, just be patient with me. I'll quickly come back, but I'm not hoping for that. All right, so we then start now with the circular flow of income, which tells us or which gives us a picture of how the various economic players are interrelated to each other and how they then feed into each other, interact with each other to form what we then call an economy that is running in each and every economy, right? So we've got the production, we've got income, we've got spending. Now, when we start to look at production, we are made to understand from the definition of economics that the central economic question or the central economic problems or things that economics or economies are trying to answer each and every day, they center around production. Why? Because we've got the questions, the main questions, the central questions in economics: what to produce, how to produce, and for whom to produce. So all those things, three, they are talking about the production. Why are we producing? Why, for whom? Who are we going to give the products that we are going to produce? What happens now in that economy? How do they pay for those products, goods, and services? So production then becomes the center of all the economic questions that we can think about. So when you look at production now, we are also then made to understand that what makes firms to come, or entrepreneurs to say, okay, I'm going to open my business and I'm going to do A, B, C, D. It's because there is demand for that thing. People want that thing. And also on the other side, there are resources to make those things. Now, the circular flow of income tells us that when firms produce goods and services, they need to have inputs for them to be able to do that, which means they rely on the factor market. The factor market, that is where you get your inputs in terms of the labor, in terms of factors of production, the various factors of production. Now, firms have to pay the owners of those factors of production, which then becomes income for the owners of the factors of production. Now, the owners of the factors of production, they need this income for what? for them to be able to buy goods and services from the producers. So that is how it then comes back. The producers, they are buying from the factor market and then they pay wages, salaries, interest, all the rewards of the factors of production. So these people, they earn the income. Now they use that very income to now spend on the goods and services that are being produced, which means the firms are now getting the money, they are selling, they are getting the money, they are getting profits and so forth. That same profit, they use it to purchase the or to participate in the factor market, where they are now going to continue buying inputs, to continue hiring labor so that they can produce. Once they produce, they sell those goods, first of all, they pay the owners of the factors of production, who will later on buy their goods. And so it becomes a circle like this. The money then starts to circulate in an economy. That is why you see that most economies that are lagging behind, if you look at their economies, you realize that there's been a break somewhere, somehow, in terms of the circular flow of income in that economy. It's either the production side was failing, and so people ended up not buying maybe in that country or from domestic firms. People end up looking at other avenues where they can buy, which means as long as there is that leakage, it means this cycle cannot continue and the economy cannot continue to run. So that is why I'm saying it's very important for us to understand this first concept, because when you look at that unit that speaks about the government sector, for example, policies that they are putting, they want to make sure that the economy, the firms, the entrepreneurs, they are able to continue producing. They want to make sure that the owners of the factors of production, they are still comfortable, they are still earning something, they are still continuing to make use of their income so that they can buy goods and stuff, they can spend that income in the economy, which then feeds back to the production. And so the circle must continue. It must not be broken. So that is why I was saying initially, it's very, very, very important for us to then understand the circular flow so that we can be able to understand everything else that then follows after this unit. Do we have any questions so far? All right, so the process or the secular, the word secular, from the secular flow of income, it then becomes clear. It then becomes clear because we can see now the interlink that is there in the economy, that is between production, between income that is earned by the factors, by the earned from the production process by those that own the factors of production. And then, of course, the spending, where we are saying it's very important that money is spent in an economy, right? So that gives us the three main flows of income in an economy. If you see a question that says the three main flows of income, then you must know it's production, income, and spending. And this circular flow, it just shows us how interlinked, how related they are, right? So in summary, I'm just trying to explain in different ways so that at least we grasp it and we can be able to move, right? So like I said, it illustrates income that is generated from the production of goods and services. And that same income is used to pay or to reward factors of production. And these owners of the factors of production, we expect them now to use that income to spend in the economy, to buy goods and services, so that at least the circular flow that is not interrupted. So these three flows of income, they then become very, 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 very important in an economy. And it shows us that these markets, they are highly interlinked. In any economy, for an economy to be healthy, we must make sure that these markets remain interlinked, remain joined, remain, feeding each other. The income continues to flow money continues to flow, their relationship is kept intact so that at least the economy can continue or can sail through, right? So from these three main flows of income, we can now see also some other hidden parts. If you just look at these three, you will then start to think, okay, this income, where are the factors of the owners of the factors of production keeping their money? Who is in between the firms and these firms and these owners of factors of production? How do they pay their salaries? How do they pay for inputs and all sorts of things? Then obviously you're starting to think of the finance sector. Then you start to think, okay, and who governs this whole economy? Then you're thinking of the government, which means now we've got the financial sector. We've got the government. They are also part and parcel of this economy. Then we can also look at imports and exports. We know that some economies are closed, but most economies, even especially nowadays, most economies, they are open economies, which means they are open to trade with other countries. So you then start to think, okay, so how does that foreign market come now into the picture? So I've mentioned the government sector, I've mentioned the financial sector, I've mentioned the foreign sector. That all also have some interlinks with these three main flows of income. So I don't want us to be confused. If a question is asking about the flows, the main flows of income, it's these three. Now, when you are asked, maybe a question can come and say, show how government involvement in the economy affects the circular flow of income. Then probably we might need to look at a diagram that shows the government in the economy. Remember, here we were saying the producer, the firms, they interact with the owners of the factors of production in the factor market. And then they also interact with spenders or households, consumers in the goods market. And then we also say in that economy, we've got the government that is usually regulating things. So it now takes us to this diagram. Okay. Can we please mute? Let me check if I can mute. Okay, right. So now this diagram gives us a bigger picture with the government now involved. Remember, we said we've got the government, we've got the financial sector, we also have the foreign sector. But now we get introduced to this one at a time, so that at least we see the bigger picture, right? So we've got now this circular flow diagram that is showing us the government and how it then relates with the firm as well as with the household in a simple circular flow of income, right? Now, we are then assuming that this economy is a mixed economy where we've got both the private firms, private sector, and the public sector. So the government becomes a key player both in the factor market and in the goods market. And at the same time, the government, in other words, the government interacts with firms as well as households in the goods market or in the sector market, right? So let's start here. This is what okay, so this is what we have in the previous slide, where we are saying producers, there's production, right? And then there is income that is earned by the factors of production. And then there are households that spend in the goods market. So in other words, we are saying firms, they produce goods and services, which they sell or supply to the goods market, where we are saying this is a market where this is a place where firms and households or consumers meet to exchange goods and services, obviously, for the price that those goods and services are being sold at, right? So that is the goods market. So the government also is a player in the goods market. It also comes into the market to buy goods and services that were produced by the firms. So that's why you are seeing some arrows to the goods market and some arrows to the government. The government also spends, and the government, we all know that the government is also owns some firms or some companies that also produce goods and services. So it can also sell goods and services. It can also spend. It can also buy from the goods and the goods market. So the government also interacts with firms on different levels. The first one is that it buys goods that the firms produce. And then the other aspect is that government also regulates the market in which these firms, in which these producers are operating. How? A very simple example, apart from policies that we can think of, is taxes. Government taxes firms, taxes producers. So we've got firms paying tax to the government. Then the government also, in this circular flow, also plays an important role, which can be seen by its interaction with households. So the government also supplies goods and services to households. It can be free of charge, or it can be via the goods market. So as you have seen there, my battery is running low. If it switches off, don't worry, I'll quickly switch on, right, to another device. Okay, so now when we look at the government in relation to the household, like I said, it interacts, it can provide goods and services to the household. This can be free of charge, like we witnessed during COVID-19. We had some food packages that were being given to people, households, and so forth. So it's another way. Or it can be selling the goods and services to the people, sometimes at prices that are very low. You see it when you look at the government, you look at public goods, you look at merit goods, and so forth. That's why I said this unit is very important, because when you get it, it will help you in the other units to follow. Then at the same time, the government also taxes households. It also levies taxes. For example, it can be the VAT, value-added tax. It can be income tax, personal income tax, and all those things. Okay, so we had started talking about how the government gets into the picture, and we mentioned that the government then becomes a key player in an economy, both from in connection with the firms or the producers, and also in connection with the households. And the government is also an active player in the factor market. Like I mentioned earlier on, that we find that the government sometimes can also be a producer. It can supply goods and services. We've got a lot of public entities, a lot of companies that are owned by the government, that the government has some substantial amount of shares in those companies, and those firms or companies, they do then provide goods and services to this goods market. So the government can also employ, can also hire, can also buy from the factor market any factor of production that it needs for the production of the goods and services that it supplies. So we then find the government being an active player as well in the factor market. So the government then becomes very important in an economy. Remember, we were saying the circular flow of income, we were saying there are three key flows of income that you need to remember. This is the flow of income from producers, from production sector. From the production side, we go to the income, and then we go to the spending. Then it comes back to the production and so forth. So the government comes in and fits there into the picture, where it is relating with both the producers, the firms, and the households in these two different markets. Then we also have the other two sectors that we also said they also come in handy into this circular flow of income. We've got the financial sector. We also have the foreign sector. Now, remember, we said we've got firms that are producing goods and services, and they are selling those goods and services in the goods market. They are also buying from the factor markets. So now we are seeing the financial sector being part of the equation. Remember, firms, they buy factors of production. They pay for those factors of production. So there's a need for the financial sector. Now, the financial sector also supplies money or funds in terms of investment funds, investment spending. Firms, when they want to invest, when they want to even to start a business, or even to just inject some more capital into the business, they approach the financial sector, banks and all sorts, to get money, to get investment. So they get that investment. That is why we see now the arrow from the financial sector to the firms. Then we also have households that also make use of the financial sector, in the sense that it borrows, it saves its money. Households, they save their, if the money that they're not going to be using, excess of income over expenses or things that they want to pay for, if they've got money remaining, they use that money to save. So they use financial sectors, and generally those savings are the ones that are then used by the finance sector to give to firms for investment, something like that. And then households also, they can also get money from the financial sector, either by their money that they have actually deposited into their accounts. They can get that money. They can also get even loans from the bank. I know we have taken loans for personal use, or more some people that have taken loans from the financial sector. So the financial sector then becomes handy in the circular flow of income. Then we also have the foreign sector, We also have the foreign sector, where we are saying we have an economy that is open, that is not closed. It's open to trade with other countries. So it means it can sell its goods, or it can buy goods from the foreign market. And when that happens, there's obviously an exchange of money there. And the government also takes some active role as well. Has some active roles to play in the foreign market as well. It also buys, it can also sell from the foreign market. Then we've got firms as well. They can buy inputs from the foreign sector. They can also sell their goods and services. Or we can actually have firms that can actually have some shareholders that are from other countries that then constitute the foreign sector. So like I also said previously, you are going to also have a foreign sector, a unit that is devoted to the foreign sector, where you talk about trade, you talk about exports, you talk about imports, you talk about the exchange rate. So when you grasp this grounding information, this foundation, you will then be able to remember or to tackle the concepts that will be taught in that unit more easily. Now, this then brings us to talk about injections and leakages in the sector, injection and leakages in the economy, right? So when we talk about leakages or withdrawals, they are called leakages or withdrawals. We are talking about
There's a question, ma'am.
yes.
I just wanted to find, I see on our module guide, page 15, the picture that we have, the one of the foreign sectors, it doesn't show government on the picture. Are you going to share page 15?
Yes. That is the one that is the foreign sector.
Yes. It does not have the government.
All right. It's okay. We can ignore the government if we want, but like I said, it also plays a role. We've got the government that is also playing part in the foreign sector. If you consider now the figure 3.8 in your textbook, I'm not sure if it's there on the module guide, it then shows you all these sectors, including the government, in terms of it being part of the circular flow of income, together with the foreign sector on the other side and the government on the other side and firms. But at the end of the day, if it's not there, it doesn't kill for you to understand how it is linked. Because remember, the government, when I'm going to do the unit on the government sector, you understand that even the unit of the foreign sector, where you're just going to look at trade, you understand that the government plays a very big role in terms of what happens in those sectors, either indirectly or directly, either through policies or directly being involved in the activities there. But at the end of the day, what we want to understand here, even if we remove the government, what we want to understand is how the foreign sector then comes into South Africa or into play in the South African economy, by understanding that there are exports and there are imports, right? So now, how does that affect the economy? So yes, we can remove the government. If you want us to stick to the module guide, we can remove it. But at the end of the day, the concept that I want you to grasp, or that we want to grasp, is how the foreign market then comes into the picture when we are talking about the circular flow of income. But if you consider also the diagram that is on page 53 in your textbook, the 5th edition, that is recommended in your module guide, you will find that the figure 3.8 there puts all these sectors together. It's only that the government in that sense and the foreign sector, they are at the far end. Like we have the finance sector here, and then you have the foreign sector this side, and the government here, and firms and households. But at the end of the day, all these sectors, they interact with each other. They interact with each other. It might be directly or indirectly. So this diagram just puts it a bit closer so that you can understand how the government interacts with the foreign sector or with firms or with households. But when you look at that diagram that is in the textbook, because of that foreign sector feeding into a line that is joining from the firm to the household, which then also goes to the government, it shows that there is that flow of income, which includes all these sectors that we are talking about, or all the parties that are in this economy: firms, households, foreign sector, government, financial sector. So this diagram, I just wanted to simplify it and to show you how then all these players come into the picture when we are talking about this flow of income within an economy. I don't know if that answers your question.
Yes, I understand, ma'am. Thank you.
All right.
And you are going to make recording available for us for reference, right?
Yes. And we are also going to do, if you join the tutorials, we are also going to do a lot of questions then it will give us a clear picture. As you attempt questions per unit, you will get a clear picture of exactly how to explain it and how to understand it, especially when you attempt questions that might come from that unit. So I was saying that it then brings us to a concept of withdrawals and injections into the circular flow of income. When we talk about withdrawals, which are also called leakages, we are talking about activities that are happening in the economy but are leading to income being withdrawn or being taken out of the circular flow of income. Let's look at taxes, for example. The government comes in and imposes taxes, not only on firms, not only on on households, but also in the foreign sector. You are going to talk about, in the unit where you're going to talk about trade and all that, you are going to talk about tariffs, where we are saying the government is imposing tariffs on in the foreign sector, import tariffs and so forth. So it means those taxes, they then become some withdrawals, because these are leakages. Instead of that money being used to being spent, it's now being paid as tax to the government. The same thing with households, the same thing with firms. They are paying tax to the government. It can be income tax, company tax, whatever tax is being levied by the government. So that becomes a leakage or a withdrawal. If we look from the finance sector, we are saying households, sometimes they decide not to spend 100% of their income. I earn 1,000 Rand. I decide that this month, I'm not going to spend my 1,000. I'm going to spend just 500, which means the other 500 is not being, it's not being injected. It's not going back into the circular flow of income. It's being kept somewhere. I'm not spending it now. I'm keeping it somewhere, which means it's a withdrawal. It's a leakage that is happening. And of course, I'm going to save it probably with my bank or another financial institution, but I'm not going to spend it now. So it becomes a withdrawal or a leakage from the circular flow of income. Then imports as well. Apart from the fact that we are receiving goods, which is a story of another day, but we're talking about income, the movement of money, the flow of income, right? So with the imports, we are saying, I am an individual in South Africa or a firm in South Africa. I need to produce goods and services, and I need some imports that I can, some inputs that I can get from Mozambique. So I'm going to buy those inputs as input. I'm going to import those inputs. So I'm going to pay money, which means that money is a leakage. It's being withdrawn from South African circular flow of income. So it's a leakage. It's a withdrawal that is happening in the economy. So imports in that sense become leakages, because we are paying money to that Mozambican firm or to that American firm to get certain goods and services, right? And then we also have how firms and even households that export goods and services. By exporting, we are saying, I'm an individual, I'm a firm, or the total number of goods in South Africa that are being sold maybe to different countries. Maybe we take our goods to Zambia, we take our goods to Mozambique, and we are earning some income from there, which means there is money that is coming into our circular flow of income from the selling of our goods and services. So we call that an injection. We call that an injection because it's money that is coming back into the circular flow of income. The same thing with investments. We are saying firms can approach company banks to ask or to seek for loans or to seek for investment fund capital, so they can get that money that they want to reinvest, that they want to invest into the business. So it means that it then becomes an injection. So anything that is bringing in money into the circular flow is an injection. Anything that is taking out money from the circular flow of income is a leakage or a withdrawal. For example, savings, we can argue and say, but maybe at one point in time, I'll go and take it and use it to buy and everything. But at that particular point in time that we are looking at the circular flow of income, you have withheld that part of your income. You are not spending it. So it's not part of the circular flow of income. So important to remember: injections, withdrawals, leakages, injections. What are they? What are we talking about? Well, remember, we're talking about flow of income. So we need to talk about the movement of money. If in the most simplest terms, movement of money. So in summary, we've got exports, we've got investment, and also government expenditure as injections, because the government maybe it can use money that it took from taxes, from the firms, from households, from the foreign sector, and so forth. Then it uses that money maybe to spend either in the foreign sector or in the goods market, in the domestic market, and so forth. So that becomes an injection because it's money that is coming back into the circular flow of income. Now, when we also talk about withdrawals or leakages, we are talking about imports, we are talking about savings, we are talking about taxes. Why are we saying all those things are leakages? It's because it's money that is not coming back into the circular flow of income. So money is going out, it's being withdrawn or withheld, or it's leaking from the circular flow of income. I don't know if there are any questions, comments. All right, so I've got just a few questions here that I've just put up together from that we can get from Unit 1. The one question that I did not put up here, probably it will be the first one that we will look at when we meet again with those that are we are going to meet with, where we are going to look at questions that will ask your understanding of the whole circular flow diagram, like the relationship between the government and the foreign sector, the relationship between the government and the firms, the relationship between the government and households or households and firms. So it's a question that will give you, a diagram, that whole circular flow diagram. I think we've got that one in our textbook. And then it tells you maybe that the arrow from the goods market to the firms, maybe it's 50 billion or something like that. They want to test if you know what flows from a certain sector of the economy to the other. Like if you see an arrow which is showing taxes, and then maybe they just put the arrow and put the figure, you must be able to know that that figure refers to taxes or something like that. So you can get that diagram, and then you have those information. You are asked to fill in maybe the missing gaps, or you are asked to calculate the injections, or you are asked to indicate the level of taxes that the government is getting from that economy, something like that. So I think we will do that first thing we meet in our next lecture before we move on to Unit 2. But for tonight, I just have these mini essays, very small marks, little marks that you can grasp easily, but the questions can help you to, look at the whole unit and see if you have understood the major parts or the important parts of the unit. So the first question here is saying outline the 3 major flaws in an economy. I think I've mentioned this over 3 times tonight. Can anyone just tell us any 1 or even 3 of them? The major flaws of income. Yes.
Production, income, and spending.
Yes. Thank you so much. That is exactly what. So that's 3 marks already. You don't even need to explain. It just says outline. And then, of course, if it asks you to explain, you know what we mean by production. We are saying these are the firms that are producing the goods and services, making use of what? Factors of production. And then, you know, they have to pay for those factors of production. And then when you talk about income now, you are picking it up from where you have left in explaining the production, where you are saying now because the people are working to produce goods and services and they own factors of production, they then get income from the production process. And after that, they get that income, they spend that income. And where is that spending going? It's going back to into the production part of the economy. So then it then becomes a circular. So the major flaws then are production, spending, and income. You get your 3 marks. Then explain the role of the foreign sector in an open economy. 4 marks. Who wants to try this? It can be 1 point, then we build it up together to get at least to 4 marks. We saw the foreign sector. Anything that you remember about the foreign sector? You can just unmute and talk.
The foreign sector is about the export and the imports.
Yes. So the role of the foreign sector, it provides a market for our exports, and then it also provides imports that are needed by our economic players. So you've got your marks there. Then now, another question that is linked to the foreign sector, it says, identify a leakage and an injection that is associated with the foreign sector. So now you know that in the foreign sector, we only talk about imports and exports. So now you need to know which one is a leakage, which one is a injection. What did we say? We said a leakage. This is where we are saying money is coming out of the circular flow. And then injection, we are saying it's coming into the circular flow. So which one is a leakage? Which one is an injection between imports and exports?
A leakage would be an import and injection and export.
Yes, because exports, we are bringing in money into the circular flow. You see? Very easy, you get your 2 marks. Then explain the role of the government in the circular flow of production, income, and spending in a closed economy. So long as they say closed economy, I mean, this is just maybe to make you think harder, but already they said the role of the government. So it means you are not going to mention anything to do with the foreign sector because it's a closed economy, which means we are now referring to that diagram that our fellow student was referring to say our diagram doesn't have the foreign sector. So it was explaining a closed economy, but it's a mixed economy because the government is still there. So what is the role of the government there?
Government imposes taxes on both firms and households.
Yes. And the second one?
The government provides goods and services.
Yes, it also buys goods and services from the market. So any of those, you can get your 4 marks. Then now, what are the leakages? What is state a leakage and an injection that is associated with the government? What is the leakage? Remember, we spoke about taxes, and then we also spoke about government expenditure. So a leakage, we say it's money coming out. Anyone? What is the taxes that the government imposes Are they leakages or injections?
Taxes is injection.
Injection to the government.
But we are saying in the circular flow of income. Yes, it's money going to the government, but we are talking about the circular flow of income. The government is taking out of the circular flow of income through taxes.
It's a
So it's a
leakage.
leakage.
So it's a leakage, yes. And then if the government comes and spends in that economy, it's an injection. Yes. So you see, it's that tricky, but you need to know if they had said to the government, then obviously it's revenue to the government. But it says here in the circular flow of income and spending. So taxes are being taken out. It's money that we were supposed to have spent, but now we are taking it to the government through taxes. So it's a leakage, it's a withdrawal from the circular flow. Then explain the role of the financial institutions in the circular flow of income and spending. The same thing that we did with the other sectors. Remember, we are saying the financial institutions. There are two things that we actually spoke about here. Anyone who remembers?
They are investing and saving.
Yes, investing and saving. And then it's obviously the next question is testing us whether we know between investment and savings, which one is a leakage, which one is an injection.
Investing is injection and
Yes.
savings is leakage.
Yes. So you see, we have summarized the whole unit. We have summarized the whole unit. And then, of course, if you look at your circular flow diagram, like that includes everything else, like I promised, I'm going to draw that diagram in our next session. Then you would have concluded the whole unit. So, of course, these are the things that this is the prescribed textbook that I was also using. And also your module guide. So any questions for today?
Sorry, ma'am, are you going to be sharing this presentation with us as well?
Yes, I think Mr. S, when he started, he did mention that he's going to share this presentation I have recorded. I'm sure he's going to share and communicate with you. So all those that want to join, you can call or email. This is our email. You can also call 074 534 9042. 074 534 9042. If there are no further questions, I think for today we can call it a day. Thank you so much for joining. Thank you.
Excuse me, ma'am.
Yes.
Excuse me, ma'am. I do have one question, ma'am.
Yes. You can go ahead.
Ma'am, on my study guide, the circular flow, I'm seeing it's on page 22. And the things that we were dealing with, they're on page 22. But then as I'm looking at this study guide, it's talking about the full employment and price stability. So I'm not sure if I'm behind or not, ma'am.
All right, that part of your module guide, I did summarize it when I was talking, because remember, it's the introduction to macroeconomics. So it's giving you an overview of what macroeconomics will cover. Remember, I also said when you look at the circular flow of income, all those other units that you're going to cover, you can actually find them in the circular flow of diagram, circular flow of income. For example, the issue of full employment inflation that you have spoken about. We are talking about prices of goods and services that are being sold in an economy, that are being produced, the goods are being produced and being sold in the goods market. So now when you talk about inflation, it's a macroeconomic objective to make sure that the general price levels are kept as low as possible. So now when you talk about price stability, we are saying macroeconomics then, or macroeconomic theory, or the government must then come up with policies to address these prices in the economy so that at least prices, the general price level is kept constant as much as possible, stable as much as possible. So that section is explaining to you what macroeconomics covers, what it looks at, and those chapters or those sectors, you are going to meet them in the units that will follow as you continue with the module. So you are very correct. It's just that I didn't go into detail with those things because those are just summaries. And I just mentioned in passing that we're going to look at unemployment, we're going to look at inflation, we're going to look at economic growth, we are going to look at even the government as a sector, monetary policy, fiscal policy, theories, all those things, they are part of macroeconomics. And if you understand the circular flow, it becomes easy for you to remember to say, okay, we mentioned that the government plays part in the foreign sector. It also plays part in the finance, even households, even firms. So now when we're talking about the sector in this unit, we are we're expanding on what we met when we did unit 1.
Oh, okay. No, thank you very much, ma'am.
All right. Thank you. If there are no further questions, let me just check. If there are any questions.
Last from me.
All right. Yeah, Mr. S just wrote a message there. Please fill up the form. It's feedback that is needed from this session. Otherwise, thank you so much for joining. Enjoy the rest of your evening. Like I said, don't hesitate to get in touch if you want to be part of this team that is moving together to make sure that economics is simplified as much as possible. Thank you for interacting. Thank you for joining. Enjoy the rest of the evening.
Good evening, Doctor. Before you leave, before we go.
Yes.
Can I just ask everyone to kindly fill in the feedback form that I posted on the chats just to get feedback from students regarding this session. And thank you so much to everyone. Please invite everyone to come. I believe this is going to be a very beneficial session. You know, in addition to what Menkosa is offering, we just offering supplementary tutorials for the benefit of students beyond the exam room. So it empowers you for life. Feel free to join us. Dr. Thelma has also shared the details on WhatsApp. I'm available. You can contact me and we can move forward from there. Thank you so much and let it be a good evening.
Thank you.
Thank you.
Bye.
Thank you.
Good
Bye.
evening.
Night, everyone.
Thank you, everyone.
Thank you. Thank you.